Testing, testing. Hey guys. Hey Natalia, nice to see you again. Hey Alice, hey Mark. Thanks for tuning in, guys. Right, nice to see you guys over here. Let me share my screen if you hope you guys are able to see it. There we go. Cool. All right. Thanks for tuning in nice and early, right? Nice to see a couple of familiar names over here, right? I do want to encourage you guys that if possible, please send your messages through the chat section. I'm just going to send it to you guys here. Hey everyone. Yeah, feel free to send messages here, right? Otherwise, if it's just me talking, it's going to be very boring for me. It'd be so lonely if it's just me talking, right? But yeah, today's webinar, it will be hosted on YouTube. No, I think it will be shared onto YouTube later, right? But I do want to encourage you guys that if you have questions, right? If you have questions on on whichever markets that you want me to look at, instruments that you want me to look at, you may do some form of analysis, or you have certain kind of you have a certain strategy, moving average crossovers, or anything you want my opinion on, right? Today's session is the perfect session for you to ask me these questions. All right, because it's a live trading session, really literally look at the markets live, and we see what trading opportunities there are. We will review some of the trades I've made a couple of weeks back. I think it's 2 weeks back, right? Hey, Mark. Good evening to you. Right, good evening to you. Yeah, guys, feel free to chat in here. Otherwise, yeah, it's gonna be boring, right? If it's just me talking, it's so lonely, right? IronFX is building they are the marketing team. They're gonna start spreading the word about the webinars a little bit more. So hopefully we can build a nice little community of people, who are looking at we can trade together, learn together, trade together. That's the fun stuff, right? But okay, let's begin today's session. All right, let's begin today's session. Remember, as usual, disclaimer first. All right, disclaimer that everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. Okay. Now, hey Shirley, nice to see you tune in too, nice and early. Right? Please use the chat section to talk or ask me questions. Right? We got Mark Joshua tuning in too. Yes, I always encourage you guys to use the chat section to just send me messages through. Otherwise, it's just me and talking to myself for the next 1 hour. So sad, right? Okay, let's rock and roll. For those of you guys who are here for the first time, let me share with you a little bit about myself. My name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group. We are finalists for Best FX Research and Best Equity Research in 2019, 2020, and 2021 by the prestigious Technical Analyst Awards. We usually work with major financial institutions, right? Forecasting where the markets are heading, right? But we have a special partnership with IronFX where we're bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level, right? Really advanced, right? Not the stuff that you find on Baby Pips, not the stuff that you find on Forex Factory. It's really good stuff, right? We have a lot of testimonials in many of the other webinars that we do. People going from 40 to 60% hit rate, 60 to 80% hit rate, unprofitable to profitable, right? Passing their own prop trader test or funded trader test, right? We have a lot of testimonials of people pouring in, right? There's one piece of advice I'd like to share with you guys is that, yes, I look really young. I am pretty young. I'm only 32 years old, just became a dad 6 weeks ago, right? And if there's any word of encouragement I'll share with you guys is that, you don't need to be, working in the trading industry for 30 years to be a good trader, right? Thank you very much, Mark, right? You just need 30 days learning the right things, right? And like me, I'm trading full-time, right? I have a whole team of prop traders, right? I'm just young, granted, I blew up about 7 accounts before I started trading profitably, but I did learn it the hard way. And what I've learned, the mistakes I've learned, I've I'm putting into all this entire webinar series so that you can avoid, right? You can avoid making the same mistakes I made, right? But at the same time, you can learn the right things, because in the world of trading, it's very tricky. It's not like the world of academia where you can only learn the right stuff, right? In the world of academia, the more you learn, the better you get, right? The more you learn, the better you score on your exam. But in trading, is very different. In trading, is very different. You can learn the right stuff and you can learn the wrong stuff. If you learn the wrong stuff, you end up losing money, right? So that's a scary thing about trading, right? You can actually learn the wrong stuff, right? So in this session, in this webinar series, I'll be doing my best to teach you guys the right stuff. All right. Now, let's begin today's session, right? I'll be showing you the key approaches we take to trading. We have a little bit of a cheat sheet checklist. We're going to be taking on the markets together. Okay, I created a new checklist to let you guys take a screenshot of if you want, right? But when I'm in trading, there are essentially two styles that you trade, okay? There are essentially two styles that you trade. When you find a key level, you're either, if price is over here, coming down, you're either playing the bounce or you're playing the breakout. Okay, so you're either playing this is what we call reversal trading, right? And this is what I call breakout trading. So in trading, there are usually two kinds. So I'll be sharing with you playing the breakout, and in the next slide, I'll be sharing with you a little cheat sheet on playing the reversal, right? If you use them properly, it can be great. Okay, so in this example over here, right, when you're playing the breakout, this all of this, we will be referencing it later when we're doing the charts. Okay, when I see a nice setup, I will come back to here and then we look at it and say, was this done? Check. Did we check this? Did we check it off? Check this off? And I will show you how the thought process that goes in my head on, like, okay, is this a good trade or is this not a good trade? Right? Because instead of just giving you guys the answers, right? I think it'll be good that you go through the thought process so that you know exactly. It's like teaching to fish, right? So if I teach you guys the thought process behind it, you can then apply it, right? And you can practice it, apply it, and be a better trader. Okay. Now, okay, let's move on. Let me just clear my drawings on this slide. The next thing, of course, is playing the bounce and reversal. You can take a screenshot of this if you want. Right, you can take a screenshot of this if you want. I will show you the thought process, the things that we did apply when we were going through a couple of the previous setups that we did, right? And it'll be pretty fun. Okay. Now, let's first and foremost, right, look at some of the previous webinars that we did. Right. Let me see if I can pull it up over here. So we got live trading session. So the great thing is that IronFX, right? IronFX playlist, right? You can see this part, webinar series for beginners, right? Well, it's not really for beginners. It'll soon be changed like this for actually it's not only for beginners. It's going to be for a lot of different people, right? So yeah, you can watch all the different live trading sessions. All right, so live trading sessions. So it's educational live trading sessions. Educational live trading, educational live trading. Yesterday we had an educational session on support and resistance. Today we're going to have live trading session. So every Wednesday it is education. Every Thursday it is live trading. So you learn, practice, learn, practice, learn, practice. Right. The more you do that, the more you can be a better trader. Okay. So if there's one thing I want to encourage you guys, if you can, watch the previous sessions, right? We are going to start covering more and more advanced stuff, pretty juicy stuff, very fun stuff, right? And let me show you, if you apply it correctly, how accurate it can be. Okay. Now let us begin. Okay. Let me first touch on the first one that we covered on pound yen. If I'm right. Okay. So on pound yen, you can see over here, cinema mode. Oh, thank God I'm not wearing the same shirt. I said I only have a couple of shirts that I just swapped. It's always a super dry shirt, right? So this was the view that we were looking on for pound yen. Okay, let me explain how we got it really quickly. Okay, there was a very nice, this is what I call overlap support. Overlap support. There is a very nice there's a very nice channel which leading, giving us that little bit of bullish momentum. You can see this little bit of Ichimoku cloud, right? Price is crossing over, below, and over here, right? The Ichimoku cloud is giving it that little bit of support. So there's 3 reasons. And then, of course, we got the Fibonacci retracement, 23%, always a good sign that price is going to push up. We have our risk reward of like 1 is to maybe 4. 1 is to 4 to have very nice setup. Okay, so in this kind of circumstances, I'm going to clear all my drawings here. We're going to do a quick reference check. So this is what I call playing the reversal, right? Because price is coming down, right? We're playing the reversal upwards. Let's go back to our checklist. Okay, so I'm playing the reversal over here. Okay, now what was it? Was price respecting any trend line? Yes, price was in a channel is essentially double trend line, right? The two you think about it, this is a trend line, this is a channel, right? Parallel trend lines are become channels, right? So price was respecting that. Price was respecting the Ichimoku. There was a key horizontal support level, and price was close to a nice little Fibonacci retracement, right? So this 4 by itself, right? This 4 by itself is enough to take a trade. Okay, recent price action is not necessary all the time because price action only happens when price is right at the moment. This over here, these two are called multipliers. Okay, multipliers. That means if they are there, I will increase the risk I'm going to put on the trade, right? This one over here, stochastic RSI, is also a multiplier, right? This is a multiplier. That means it doesn't affect my trade, whether I'm going to take the trade or not, right? What it affects is how much money I'm going to put on the trade, right? If it's in my favor, I'm going to put more. If not, I'm going to put less, okay? But by itself, right, I can see that there's, there's already 1, 2, 3, 4 very nice reasons to go and take a trade, right? So I'm going to clear all this, right? And we are going to take a quick look, all right? We're going to take a quick look. What is this? This is pound yen, right? So it's pound yen. Let me just say, let me just load up pound yen over here. GBP, JPY. What was it? It was the weekly chart, right? So let's take a look over here. Pound yen. Our trade was, playing that little bounce, right? I wonder if I have the correct pound yen, right? Just let me. Okay, yeah, I mean, they're all more or less the same, right? So we were saying that price was going to bounce from here, right? So this was our buy entry, right? This was our buy entry. This was our nice little bullish channel that was going upwards, right? As you can see over here, this was a nice little bullish channel, right? I think if I'm not wrong, I'm just going to estimate levels. This was a stop loss. This was a stop loss, and this was a take profit. This was a take profit. I think the stop loss was about here, right? You can see side by side comparison with this trade over here. Let me just I want to make this slightly smaller, right? You can see a side by side comparison. This was a trade that we're looking at. Yeah, calling a little bounce above to the recent swing high over here with a stop loss. We can see how it worked out very nicely, right? So I'm going to maximize this again, right? Price really actually just bounced up from our entry all the way up to our take profit. Now, this is an important thing that I want to focus for you guys. Take profit placement is equally important, right? You notice that in this example, right, price actually shot all the way up, right? It shot all the way up, touch our take profit, and then reverse. Okay, it touch our take profit and reverse. So a lot of people, they focus too much on the entry, right? They're just thinking, okay, once I get the entry, I'm just going to put the stop loss and take profit placements is like an afterthought, right? They're like, all right, I got my entry, 100 pip stop loss, 100 pip take profit, just let it run, right? The danger with that is because you're getting blindsided by the fact that take profit placement is as important as your entry. Okay, take profit placement is as important as your entry. Stop loss placement is as important as your entry. What do I mean by that? Okay, so if you put your take profit correctly, right, there's a reason why we put our take profit at a major level over here, right? If there was a trading strategy, right? If there was a trading strategy, I'm gonna put my long position here, and the trading strategy says what is it? Maybe put 130 pips, right? 130 pips take profit. Okay, so if you have a trading strategy, right, I just want to focus on this thing here. If you had a trading strategy that randomly told you to put your take profit at 130 pips, so there, you go on Baby Pips, you go on Forex Factory, there are a lot of this. Hey, Nanga, nice to see you here. I remember you from yesterday, right? Hey, at least nice to see you too. Tony, nice to see you. Hey, a nice bunch of you guys tuning in, right? We got a guy hot in Phoenix Note 7 here, right? Nice to see you guys here. Okay, now that a couple more people are here, I just want to encourage you guys that if you can, I'm just sending a message. This is a chat room, right? Please feel free. Please just send messages throughout, because you can call me a professor too. I don't mind it. I'm a big fan of what's that show called? Money Heist. Right? The professor, right? But yeah, please, if you can, just send messages through. Otherwise, it's just gonna be me talking to myself. It's gonna be so sad, right? Mark, good question. How do I base my stop loss? I'll be sharing with you in a bit how I base it, right? Importantly here, right? The one thing that before I touch on that, right? Before I touched on that, Mark, right? My take profit placement. You read a lot of trading strategies, right? You go on Baby Pips, and all these trading strategies tell you that you just get in, right? Put your take profit at 100 pips, your stop loss at 100 pips. They give you a fixed stop loss and a fixed take profit. The problem with that is that you're not referencing the chart when you're trading, because in this case, if you just put your take profit, like imagine you have a fixed take profit over here. If your take profit was slightly higher over here, right? We're going to zoom in here. It was slightly higher, you would have missed your take profit and price would have went all the way down, right? So sometimes when you're trading, we start to wonder, like, man, why did price just miss my take profit just by that couple of pips, right? Just by the little bit, and it starts going the opposite direction, and you start wondering, is the market being manipulated, right? Is there a reason why this is happening, right? And the reason for that is because the market will not manipulate you. The market cannot focus on a single person. I'm going to manipulate this person. But what the market does is that the market gets reacts off key levels, right? So if this was a major level, right, as we can see over here, if this was a major level previously, right, this would be another major level. Right, this would be another major level that price would tend to reverse from. So a rule of thumb, which I'm going to share with you guys, I'm going to type it out here, is that take profit equals before, right? Stop loss equals beyond. If you can, take that down in a notepad somewhere. Take profit, always put it before a key level. Stop loss, always put it beyond a key level. Okay, because you want to get out of your trade, right? In this case, you want to get out of the trade before the price reverses. So in this case, your take profit level somewhere here is better. Don't put it beyond, because the moment you put it slightly beyond, you run the risk of price reversing even before it hits your take profit level. Okay, it's important. Just this by itself will improve your hit rate by a lot. Right, improve your just your stop loss and take profit, getting it right by a lot. Okay, now the next thing, so Mark was asking, how do I decide my stop loss? Let me just check my YouTube video again. Okay, stop loss placement, I know why I place it there. Okay, let me pull up my chart again. Just let me pull up my chart. Oh, where's my chart? Okay, my stop loss placement, I put it somewhere over here. Now, I'm going to close this off. One thing that you're going to be wondering is, why was the stop loss placement over here? Okay. Now, first things first is that you must know what is your hypothesis? Okay, simpler terms, what is your best case scenario? What is the reason you're taking this trade? You're taking this trade because you believe that price has broken this key level. You believe that price is being pushed up by this channel. I think we had the Ichimoku too, right? You believe that the Ichimoku cloud was holding price up. Okay, I'm going to hide the Ichimoku cloud first. So we believe that all these reasons is pushing price up. Now, if price doesn't bounce from here, right? If price doesn't bounce from here, let me see if I can draw it out here. If price doesn't bounce from here, let me see if I can do a ghost feed, right? And price actually, price comes down to here, comes down to here and stuff. Is there a reason for us to have our stop loss? Some trading strategies say you have a 1:1 risk reward, right? We have a stop loss here, take profit over here, right? Sorry, just let me close up that. So imagine I'm going to use the bar replay feature. Maybe bar replay, I'm going to hide out over here. Okay, bar replay feature, right? And there we go. So we're expecting price to touch this level and go up, right? This was our best case scenario. This was what we figured makes sense in this trading strategy. Now, the moment price breaks the channel and breaks this overlap support, right? This support level where my buy entry is, the moment price breaks out from there and comes down here, comes down to here, comes down to here, right? You need to ask yourself, is there a reason, right? Is there a reason why I am still holding onto this trade? Do I expect prices to suddenly come all the way, is there a reason why I'm expecting prices to, go all the way down to here and then potentially come back up to here? Is there a reason why I'm expecting it to happen? Most of the time, you don't expect it to happen the moment. So there are a few key times in the key moments in this trade. Okay, let me just highlight it to you. Where's my this level? The moment price comes down to here, okay, the moment price comes down to, let me put it as a solid line. The moment price comes down to this level, the moment it breaks the channel and breaks this overlap, right, you already need to ask yourself, why am I even in this trade? Is there a reason I'm in this trade? Am I just holding on to it because I'm emotionally attached to this trade? Because technically, theoretically, it doesn't make sense to be in the trade. Trade didn't work out, I'm wrong. Now, imagine guys, right, and girls. Okay, mainly for the guys. If you were to propose, right, you have the love of your life, right, and you propose to her and say, will you marry me? Okay, what do you hope to get? What answer do you hope to get, right? You hope to get a definite answer really quickly, right? You hope to say yes or no, right? If she says maybe, that's the worst answer to get, right? You just want, if you is either say yes and you get married, and you say no and I can move on with my life. The worst thing is she say maybe, I'll think about it, right? And then you're caught in the you're caught in no man's land, right? Treat trading with the same seriousness. Okay, when you get in on a trade, when you have an idea, you want to know whether you're right or you want to know whether you're wrong right away. You must know at what point of time you say that, no, I don't want, that you don't even want to have a period of uncertainty. Okay, you don't even want to have a period of uncertainty, right? So in this case, long answer to a short question mark, right? Why did I put my stop loss over here? First reason is because if I am wrong, if someone wants to reject me, I want to know it right away. I don't like the ambiguity. I don't like the uncertainty. Like, am I really right? Am I really wrong? If I am wrong, right, I want prices to just break this thing, break it, and I get stopped out. Fine, I lose a trade, I can take it. Now, why is it so important to have, some people might be asking, why not just use a wider stop loss? Now, you see, there is a price you pay for having a wider stop loss. There is a price you pay for having a wider stop loss. Let me show you what I mean. Okay. And this for that, right? I'm just going to show you two examples. Where is my long position over here? So long position, right? And I just want to show you, okay, we have a stop loss over here and we have our take profit all the way up to here. What you want to focus on is this thing here called risk to reward ratio. Risk to reward ratio of 3.35. Okay, what does the risk to reward ratio of 3.35 means? It basically means if you risk $1, you will make $3.35. If you risk $100, you make $335, right? You make 3.35 times the amount that you're risking. Okay, I'm going to repeat that again. Risk to reward basically means that for each dollar you risk, how much you're getting. So if we have a very, very big, profit target all the way up to here, for every $1 we risk, we get about $8 here. All right. In this case, we have about let's just put it at 3.3. Okay. Now, if we look at this number, I want you to look at this number here, 3.3. Okay, focus on it. Right. Let's just say we move our stop loss further down. Look, as we move it further down, what do you notice? Our risk to reward is dropping, is dropping. So if I wanted to move, because I wanted to move my stop loss over here to have to be a little bit more comfortable, right? I'm thinking, yeah, just moving my stop loss lower. I'm not adjusting my take profit. So technically it's okay. But what you notice is that your risk to reward just became half. Your trade became half as profitable. Just because you wanted a little bit more comfort, when if price, didn't bounce up here, right? And it started to go down here, right? Go down here. You wanted you wanted that little bit more, what's the word for it? You wanted a little bit more breathing space, right? So that you don't feel wrong right away, right? It feels great when you have such a fast stop loss, right? We're like, price is so far from my stop loss. I don't need to worry about it. But there is a price that you're paying for that. You're getting your trades don't have a good risk to reward ratio, right? So in this case, you're paying for, this much breathing space. And the thing is, why are you even paying for the much breathing space? Because if you're, by the time price is somewhere over here, that your original trade idea of your channel and your support line bouncing up, it's not valid anymore, right? Your original idea does not work anymore, right? So if you're wrong, you just want to be wrong right away. So look at the opposite, look at the flip side, okay? If you're very, very confident on your trade that is definitely going to bounce over there, imagine a future version of yourself, right? A future version of yourself coming and say maybe Ellen or Inanga, right? It's like, hey, Inanga, right? I came from the future, right? I came from the future, and this trade that you're planning to take, it's going to work 100%, right? It's not even going to go below the buy entry by a little bit. It's just going to bounce up right away. Okay, what's going to happen? What are you going to do? You're going to take a stop loss and you're going to tighten it so much, right? You're going to tighten it until maybe over here. Can you see that? If you have a super tight stop loss, what is your risk to reward? Now it's 1:19, 1:20. The tighter you keep your stop loss, the better the risk to reward of your trade, right? The tighter you keep your stop loss, the better the risk to reward of your trade. And that's something which I want you guys to practice, right? When you comes to placing an entry, don't just have a wide stop loss for the sake of it. So in this case, why I placed my stop loss over here, firstly, I wanted it to be very, very tight, right? So the moment price break this channel, I wanted to know that I'm wrong. Why I gave it a little bit of breathing space is because I was worried that price might come down here and maybe, it has this little bit of a candle wick that comes down, right? It has a candle like this, a little bit of indecision candle, and then the wick comes down, right? I noticed that, the wick of the candles tend to be quite big. So I want to give it just a little bit of breathing space, right? In case prices came down to there. Okay. In terms of stop loss placement, I usually like to use a Fibonacci retracement, right? So my Fibonacci retracement, I got 23 and 38, right? In this case, 38% over here was too far away. That's why I just figured, since I don't have a great level, I'm just going to put it pretty tight. We'll be looking at a couple more examples and analyzing it, right? And okay, in this example, we made some pretty good money. That's good stuff. In this example, I think this was one of the, look at this, right? We were looking at gold. We're looking at gold. What are we playing here, guys? We're playing a reversal, right? So this was on the 19th of June, and 9th of June, right? So it's just, right now, June, that was just last week. No. This was not on 9th of June. This was on the 2nd of June, sorry. So on the 2nd of June. This was uploaded on the 9th of June, sorry. Right, 2nd of June. So I was going to call a drop over here, right? So we are playing a reversal. What is in our favor, right? We got a bearish channel. We got a bearish Ichimoku, right? We got a nice overlap resistance. And we got, I know you can't really see it, but I think it's a 50% Fibonacci retracement, right? And we're just playing the move down to here. Let's go back, guys. Let's go back to our little handy dandy keynote. So we're playing the reversal. What do we look out for again, right? Bam. We're going to look out for, was it respecting a trend line? Yes, it was. Oh, cool. I can put this. Yes, it was. It was respecting Ichimoku, right? There was a key resistance level, and it was testing a nice 50% Fibonacci retracement. Same thing as just now, exactly the same thing. I did not even bother to look at stochastic RSI. I believe the stochastic RSI was probably good at the point of time. We can take a review of it, right? But the stochastic RSI was probably good at that point of time also. All right. So let's go back. Let's then just jump back to our charts, right? Our charts over here. Oops, am I still drawing little check marks? Okay, let's go to XAU USD, right? XAU USD. There we go. This was the exact idea that we're looking at, right? We're looking for price to drop from 1884 area, right? So this was the 18, just about there, 1884 about there, this area around here. We're expecting prices to reverse from this area down. It really touched price and reversed very nicely. Some of you guys might be wondering, okay, what about that stochastic thing that you're talking about, right? So stochastic, a trick to do with the stochastic, right? This is a nice little trick, right? Remove the upper band and lower band and background, okay? Use 2113 as the level. Yeah, sorry, 2113. It's one of the better ones, right? Make this thicker so that it's slightly thicker. And don't bother looking at the slow stochastic. No one wants to look at the slow stochastic, okay? Now, let me show you a little trick which I've used, the institutions tend to use. Okay, look at where the previous reversals happen. Previous reversal, one of it happened here. Let me just put it into a dash line, or is a dotted line. One of the big reversals happened here. Another big reversal happened over about here, right? Now, okay, maybe we need this. Yeah, sorry, it's the wrong one. Yeah, this one. Okay, so the one reversal happened over here, one reversal happened over here. Let's go at 21. Let me see, 34. Don't worry, all this will make sense later when I explain to you guys. Yeah, 14. Okay, so one of the things that I tend to look out for is I tend to look out for this thing where I look at where the previous big reversals happen. I draw a resistance level there, because a lot of people for stochastic, they like to use the standard. They like to use the standard 80-20, right? They like to look at 80%, 20%. But whoever said 80-20 was the right way to do? No one actually said the laws of stochastic will obey 80-20. Instead, you should be looking at the hidden level of support and resistance. So you remove the 80-20, you draw the levels over here, and you see where price might be reacting off. So in this case, we notice that price was reacting off the 93%. Every time price touch the 93, it drops, right? Touch the 93, it drops, right? So these are things that you want to take note of, right? Touch the 93 over here, right? You touch the 93 and it dropped over there. So that is a hidden level of stochastic, right? But anyway, we'll have a topic explaining this in further detail in the future. So don't worry too much about it. Okay, so now I'm just going to erase this. We can see that price reversed very nicely, right? I had a nice Fibonacci retracement here to here. Yep, 38% retracement as expected, right? 38.62, I think. Now, you notice how did I have my stop loss placement over here, right? My stop loss placement, right? If you look at this, in terms, there's this golden ratio, 61.8 retracement over here, okay? Which is why I put my stop loss. Remember, what was the tip I gave you guys just now? Stop loss beyond, take profit before. So my stop loss, I will not put it exactly over here. I'll put my stop loss slightly beyond to give it just a little bit of breathing space. Okay, that is enough, for a trade. That is enough for a trade. We expected prices to drop down, right? We can see prices indeed touch it, drop to 1821, right? Yeah, exactly, drop to the 1821 level over here, right? Make some good money. Remember the checklist I showed you, right? Remember the checklist I showed you. If you can, where am I? Where is my keynote, right? Can take a screenshot of this, right? This is useful stuff when you want to take a trade. What if you're wondering what are the definite things you need to have, I would definitely look for this. These are the four, I would say maybe the stars, right? These are the 4 stars that we need, okay? If you have this, usually your trade is pretty good already. This is just the 4 little stars that we have, okay? Then I'm going, I don't know how to change the color. Now, what are the nice to have? The nice to haves are this. It's nice to have this. It's nice to have this. It's nice to have this, right? And this is more like the take profit level, right? What the hell am I drawing over here? I have no idea, right? This is more like the take profit level that you're playing it to, right? But these are the nice to haves. The green ones are the nice to haves. The blue ones are the ones that you should have. You have this 4, is pretty good for you to take a trade already, okay? Now, let me just go back to the charts, and I do want to show you one more thing in terms of the take profit placement. Where's my charts again? Okay, so why is my take profit over here? Why did I put my take profit over here? Right, it's because of one reason. Just let me get out of my drawing mode again. Pure drawings. Like, why was my take profit over here? Why didn't I put my take profit over here? Right? The reason is because if you notice, right, I'm going to zoom in here. Price, for multiple times, price failed to close below that level, right? You can see 1 time, 2 bars, 3 bars, 4 bars, 5 bars, all over here. It really failed to close below that level. So I was a little bit worried of putting it so far away. So I figured, yeah, if it comes back to here, it is probably safe enough, right? I think I put it at the 1821 about there. Yeah, about here. At the same time, right, I believe there was, I highlighted that there was this nice little ascending support, which was pushing prices up, right? So there was this, I think it's over here. Was it here? No. Was it here? Yeah, something like that. This little support line that was kind of just pushing prices up. So I didn't want to play it too far down. Okay. The last one we're going to look at is, I think it has to be one of my trades of the week, of the month. Right. So this is on US oil. US oil, how do I define this, right? How do I define this? Firstly, let's break this down, okay? I have my blue line over here. Firstly, overlap support. Secondly, we are in a channel. So channel, what does that mean? You have bullish momentum, right? You got bullish momentum here. Thirdly, you got a nice little Ichimoku cloud over here. Okay. Fourth, you got a little bit advanced. I will teach you guys in the future, right? A little bit advanced, but we have a nice little Elliott wave structure over here. 1, 2, 3, 4, 5. We're expecting prices to touch this buy entry and push up to take profit. Now, at this point of time, right? If you look at this, At this point of time, oil was dropping like crazy. So a lot of people will be thinking I'm crazy to say that it's going to bounce from here, right, to go up to there. Oil just reverse off the 120 level, which was like a very, very, it's a significant enough swing high, right? And it's dropping. So why do we call the bounce that is going to happen? It's because of this, right? So we come back to here. Where is it? I'm going to look for my keynote. Yep, we're back to here. Right, there was respecting, it was okay. It was respecting Ichimoku. It was respecting a trend line, and it was testing a Fibonacci level. I think that's a retracement because Elliott wave uses a lot of it from Fibonacci, right? Elliott wave uses a lot of it from there. Then there was a little bit of channel that was momentum, but it's not that great, right? It's more of just a momentum, right? So in this example, where I'm just gonna clear all my drawings. So what happened since then, guys? Let's just take a look, right? Let's just take a look. And I mean, there's no way. This is clearly me over here, right? This is clearly me. This was a live analysis that we did on IronFX, right? On the 2nd of June. There's no way I can be, faking this. And that's one thing I like, right? In this kind of sessions, you stick your neck out there. If you're wrong, you're really wrong. If you're right, at least everyone can see that, you were right. So I had US oil, right? So let's take a look at US oil. Can you see that? Was this our view, right? Our view was that price was going to bounce up over here, right? True enough, it bounced up and it hit our target perfectly. Absolutely perfectly. Just touch our entry over here and it went all the way up. Stop loss placement, right? Let me explain it, right? We just put it slightly below our entry. There's no reason for me to put my stop loss so far. I know that if in terms of Elliott wave theory, right? I'm not sure how many of you guys here are familiar with Elliott wave theory, but in Elliott wave theory, there is this rule where where's my drawing? In Elliott wave theory, there's this rule where your wave 4 should not go beyond the territory of your wave 1. So if I'm wrong, if my Elliott wave theory is wrong, right? Price should not even if it is right rather, right? Price should just touch this and bounce up right away. That is one of the rules of Elliott wave, right? If we want, we can just do a quick little search on it, right? So I just show you what I mean, right? Elliott wave rules, right? Wave 2 cannot retrace more than 100% of the first. No, this is not the one. Okay. Wave 4 cannot go beyond the third wave at any point of time. So this is exactly what I mean. Your wave 4 cannot go into the territory of wave 1. Okay. And then we caught a bounce and made a nice little profit over there. Okay. So this is a really great example of what's the word for it? Applying Elliott wave theory, a little bit more advanced stuff. Don't worry about it, right? We will cover this in the upcoming sessions, right? I'll be showing you guys how you can actually start applying some of these more advanced approaches to trading, right? I'm going to ask a question now. Does anyone have any particular, oops, what's this point, right? Does anyone have any particular, what's the word for it? Currency or instrument you kind of want me to take a look at? I just clear my drawings here. Where is that? Polls and quizzes. Yeah, does anyone have any particular, okay, we got a request on GBP JPY, right? Just give me a question. Okay, anyone else, right? Okay. I'm just collating answers here. Okay. Thank you very much, guys. Okay. Major pairs, right? Pound yen. Okay. All right. Dollar pound, GBP USD. All right. Let's take a look at it. All right, guys. So we're gonna Synthetic. Tony, what do you mean by synthetic, right? Maybe you can share with me a little bit more about it. All right, let's take a quick look at pound yen actually. Oh, I think we were looking at pound yen just now. What do we expect with pound yen now? All right, so usually when it comes to analysis, right, what I like to do, right, I like to go from a top-down approach. And usually with any analysis, it's important to know what is the time horizon, right? Are you looking for next 5 minutes, 5 hours, 5 days, 5 weeks, right? You gotta let me know. Okay, in this case, right, what I like to do is like to pull up the chart, go on to the daily time frame. And I have a big picture, right? So on the daily time frame, I'm looking at it over here, and I'm like, whoa, okay, there is a nice bit of, ascending channel, ascending trend line, right? There's that nice little bit of, there's nice little channel over here, right? You can see what's the rule of a channel. I told you guys, right? You need 1 touch, you need 2 touch, you need 3 touches, you need 4 touches. So we have confirmed that this is a bullish channel. So there's a little bit of bullish momentum, right? Ichimoku cloud price is right above the Ichimoku cloud, right? It's testing that level. So just off the bat, we can establish that we have a bullish momentum bias. Okay, now we look at the trade. So we know that, okay, there's a little bit of a bullish momentum that we're looking at. Let's start diving into the setups. Okay, now let's go into on the 1 day chart. There isn't anything great. Let's go into the 4 hour chart. All right, clear all my drawings. And I start looking at it again, right? I'm just looking at this over here. Anything that is really, really obvious, right? So I'm just looking at this. I'm seeing that price might have made a breakout over there. Price might have made a breakout over here. Okay. Wait, I'm just going to draw a couple more things just to confirm this. Broker 50%, broker 61.8. Okay. Okay. Price has broken this nice 61.8 retracement. All right, I'm just going to leave this over here, 61.8. This was a key level. This was a key support level because price reversed very nicely from it. Remember our webinar yesterday, right? Those people who thought it was going to reverse from here, right, were taken on the right, taken on the right, taken on the right. By the time it went back down to here, they closed off their position. It made that small little bounce, right? And now it has actually finally broke it, right? So this is a nice overlap kind of resistance, right? It's a nice overlap resistance. In terms of Ichimoku, we can see that price has crossed below the Ichimoku cloud. So there's that little bit of bearishness. Okay. Where's the next key support level? Next key support level is down here. Down here. Right. Why is it down here? Because price bounced once, bounced twice, bounced 3 times. Right. This is the next big support level down here. Risk level that we're looking at, right? There's price clearly bounced off this area. Right. Price clearly bounced off this area. I will highlight this as a more of an intermediate kind of support. Right, because price it is overlap. Price did drop down, test this area once, test this area twice. So it is a intermediate support level for us to highlight. Okay. Now, if price can close below this level, slightly tricky. If price can close below this level, I believe we should be seeing a push down to here. Right, but price must firstly close below this level. Okay, I do see it's a nice little bit of bearishness, but on the daily chart, I'm a little bit wary. On the daily chart, right? You cannot play it down too far, right? So what I like to do is that if I'm thinking of playing it down to here, I will go back to the daily chart and I will draw my, okay, what channel did I draw just now? I drew this channel, right? So I would then look, okay, if I'm playing down to here, it's still okay. It's still reasonable, right? Because it's not like I'm playing the move beyond the channel. If I was playing up to here, then I'll be a little bit worried. I'll be like, okay, maybe I should not play it up to there, right? It's beyond the major channel on the 1 day chart. But if I'm just playing it down to here, yeah, it is within the channel, makes sense. I'm still respecting the higher time frame. Okay, so that is my view on pound yen. Okay, we got another request for Gbp Usd. Right, so pound dollar. We're gonna look at pound dollar over here. Same thing, pound dollar. Let's look at the higher time frame first. 1 day chart. Sometimes I even like to go to the 1 week chart just to see, is there a super big view? Am I missing out on something? I'm a little bit wary. I'm a little bit wary about this move, right? So you can see price bouncing up multiple times from this level. So I'm a little bit wary about this here, right? 1 times, 2 times, 3 times, 4 times. This is a little bit of an anomaly, but 4 times there is a little bit of a concern for me. But it's just something that I need to take note of. Okay, it's not too important for me. I'm just going to delete that. Come back down to here. Now, what is the general momentum of the market? You can see that price is going, you got it lower, 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 lower highs, lower highs. Clearly, it's bearish, right? Now, Ichimoku cloud, right? Nice bit amount of red clouds over there. So generally, still pretty bearish, right? Generally, still pretty bearish. Any big level for it to drop down to? I don't think there's a big level for it to drop down to. In fact, the only level for it to drop down to is down here, right? This is the next big level for it to drop down to 1.14. It has broken out, right? So we can see that it has broken out of this key level over here. It has broken out of this key level. If, well, let me just take a look at it. I mean, there's a nice little bearishness over here, pushing prices down. I don't think that's a channel. Could there be a channel? Let me just check. Well, not much of a channel, not much of a bearish channel. You could kind of squeeze one out, but overall, at least you can tell that there's a nice little bit of bearishness. Natalia, answer your question a bit, right? So there's a nice little bit of bearishness. We could be, I would be confident to play the move down, but I don't want to play it all the way down, right? You can actually, if you want to be safe, you could play the move down just to the big low here, right? You can just play the move down to here. It will be enough already, right? I do believe we got a nice bit of Fibonacci retracement. 2338, probably 38%. You want to be safe on this? I think you can put your stop loss. You can probably put your stop loss, give it a little bit of breathing space, probably about over here, right? You can put your stop loss over here and play the move down to there. This is what I kind of see might be happening, okay? Because one concern I have is that price, kind of like weak around here a bit, test this level, then it dropped down. So you need to put your stop loss slightly further, give it that bit of breathing space, okay? Natalia is asking, right, which time frame is best to start the analysis, H4 or 1D or both, right? So usually on the 1 day chart, go do a top-down approach. Always do a top-down approach when you trade, because when you do a top-down approach, you look at a higher time frame, then you go to a lower time frame, right? You need to respect the higher time frame, because sometimes you might be thinking, oh yeah, this looks like a great level, right? So for example, dollar yen, right? Let's see dollar yen. Dollar yen. Let's talk about a higher time frame. If you were looking on the 1 week time frame, right? Just say you're looking on like this time frame. You're looking at this and you're like, wow, it's going to the moon. It's great. It's going to the moon. I'm going to buy here and I'm going to play the move up, right? It's going to the moon. What you don't realize is that if you change it, just always jump 1 time frame higher. Jump one time frame higher. You zoom out and you're like, oh, wait a holy second. There is this major level over here. This major level all the way since 2 decades ago, right? February 2002. Price has not broken this major level since February 2002. It has been on this move since, right? So would you buy over here? Would you buy? You wouldn't buy, because this is a major level. What happens when prices reaches a major level? It tends to have a little bit of resistance, tends to drop, right? So always start from the higher time frame. So in this case, when I'm looking at this on the higher time frame, so from here, then I go one time frame lower, then I'll be like, okay, maybe I'll look for opportunities to sell, now that I'm over here. So it's the same thing, you know, when you're analyzing, you don't look at the 4-hour chart, right? You don't look at a 4-hour chart, then go into the 1-day chart. Instead, you look at the 1-day chart, right? So we're looking at the 1-day chart here, then we go into the 4-hour chart to zoom in a little bit more. Okay, always start from the higher time frame down to a lower time frame. Okay, now guys, I do want to run a quick poll, right? For you guys, I just launched it, right? Please leave your feedback if you can, right? Because IronFX, they are constantly asking for people to leave their feedback. If you found today's session useful, give me a 4 or 5, right? That's great. And if not, also give me feedback, right, on how you want us to better improve, right? Is there a reason why? Do you want me to touch on more trading strategies? Do you want me to touch more on this or that? You let me know, and I will, you know, in the next time you see me next week, right, I'll be able to fine tune it a little bit more so that the session, you know, it benefits you a little bit more. Okay. But all right, guys, I'm just going to give it maybe for just a couple more seconds before I close this off. Thank you very much for leaving me your reviews, right? These will all go back to IronFX, right? So, so yeah, you know, don't worry. If you rate it a 1 or something, I will not come and hunt you down, right? But at least let me know why, right? But it's good enough, right? We got a small little group of us here today, right? Nice bit, or at least we got 100% of you guys rating it above 4 or 5. So thank you very much. Okay, now guys, one last parting note I want to share with you guys, right? On the last parting note, is that if you are could you guys let me know? Sorry, could you guys let me know how many of you guys are IronFX clients, or how many of you guys are not IronFX clients, right? Because sometimes I'm not sure if any of you guys are IronFX clients or not, right? But okay, Natalia, that's great. If you are an IronFX client, right? They're running a promotion. Same thing I shared with you yesterday, Natalia. Right, I'm just going to share it really quickly for Alice. I mean Alan, Inanga, that is great. Mark, if you're not, please do join. Right? Do join for one reason. Is because IronFX, right, has this VIP room which they are launching. Right, VIP room which they're launching. I'm going to be in there, and I can guide you to be a better trader in there. Okay, what do I mean by that? Right, this link over here. I'm going to paste it for you guys. You can register for a free account, right? As long as you have a live account, right, you have access into this room. And in this room, right, depending on your access amount, right, on the account size that you have, right, you will get more and more access to better research, right? So if you're a live account holder, you already have access to this, right? So please come in here, click on this thing called request access, and just attach maybe a screenshot of your IronFX account, and I can approve it for you. So this is on the official vip.ironfx.com website. And one of the benefits is that, you know, let's just say we were looking at gold. Let's just say we're looking at gold, and you can ask me a questions very, very easily, right? You can say, you can say, hey, Desmond. Okay, you know what? Let me just draw a line first, right? So you might think that this is a support level over here. You're wondering whether price would bounce if it comes down to this support level. You can say, hey, Desmond, mention Desmond. Do you think price might bounce from this support level? What support level am I referring to? You highlight this thing over here. You click link object to text, and you select whatever you just drew. Like maybe you just drew this line over here, you just click on it, right? You click confirm, send a message, and I know exactly what you're referring to, because when I hover my mouse over this, I say, this is the support level that you're referring to, right? So I can then give you better feedback. You know, maybe I can say that I agree with it. I give you a nice little thumbs up, right? I can come in, I can just discuss this with you. I say, yeah, this looks like a nice level, right? You can come in, I can guide you when you're trading. I will be sharing a lot of my top trading ideas over here, right? So we got a very good trade on crude oil. You know, I also shared it over here, but most importantly is to help you be a better trader. You learning without practicing is a little bit of a waste. So, you know, Inanga, Alan, right? And of course, Natalia, if you can just join me in there. It's a small community first. That's why IronFX is allowing anyone with live account to join, right? I think they might make it tougher for people to join in the future because it's a VIP room. But yes, if you have an account, might as well just go get it, right? It doesn't cost you a single cent, right? All right, that's it for me, guys. Thank you very much, right? Thank you very much for staying with me through it all, right? We got Ellen, we got Inanga, right? We got Jory, we got Mark, Ariola, Natalia. Thank you very much for staying through it all, right? Thank you to Natalia. That's great to see. I hope to see you inside there, right? It's awesome stuff, right? You guys have been a lot more vocal today, which was great, right? Thank you, Inanga. Thank you, Ellen, right? We're building a nice little community here. We're starting slow, so it's not like a massive group of people, but you guys will be the original group of people in there. And yeah, with the correct training guidance, I think you guys can be really, really good traders, right? Or you might already be great traders, even and become even better. All right. Thank you very much. Right. I'll catch you guys next week for another session. So remember, go to the IronFX website, register for their webinars, especially the next upcoming English webinar. Some of you guys might be asking, where is it? Just very easily go to ironfx.com. I'll be showing you over here. Right, ironfx.com. You want to go to, of course, you want to go to IronFX School. Click on this thing called webinar, right? You can see, of course, that's our profiles down here. That's me, right? Some of you guys saw Cassandra last week, right? But yeah, you come down here and you can register for next week's one, which is on trend lines and channels. Really great topic because we use it. If you notice in today's analysis, we use a lot of trend lines and channels. So I'll be teaching you how to use it properly next week. Go register for it if you can, right? Thank you very much, guys. I'll catch you guys next week. Stay safe, trade safe. Peace out, guys. Thank you very much. And yeah, have a good weekend. I'll catch you guys next week. Adios. Bye-bye.